last week's hottest new listings and the ones that could explode this week. Today, let's talk about DPC Holdings plc, a company that's making significant strides in the aerospace and defense sectors. DPC specializes in manufacturing engine products, and they are known for producing complex precision cast components and nickel and cobalt-based superalloys. Their offerings are crucial for the aerospace industry, including stationary parts like turbine center frames and combustion diffusers. Beyond aerospace, they also cater to the industrial gas turbine market and even transportation through products like turbocharger wheels. With a global presence across the UK, Europe, and the United States, DPC is well positioned in a growing industry that demands high-quality, precision-engineered components. Now, let's dive into the IPO details. DPC Holdings plc officially listed on the XNYS on June 25, 2026, at a final price of $33 per share, after an impressive offer size of about $919 million. This significant capital raise indicates a robust interest from investors, reflecting confidence in their business model and market potential. Fast forward to today, and DPC is trading at approximately $48.34, marking a notable increase of about 2.52% since its debut. This performance suggests that the market is responding positively to the company's fundamentals and growth prospects within the aerospace and defense sectors. Looking ahead, the outlook for DPC Holdings seems promising. In the short term, the positive price momentum and sustained interest in aerospace and defense sectors could fuel further growth. Long term, DPC may benefit from increasing global spending in defense and aerospace, especially as nations prioritize modernization and technological advancements. For those considering an entry point, monitoring the stock around $45 to $48 could present a favorable scenario, especially if you believe in the company's long-term prospects. Conversely, if you're looking at an exit strategy, keeping an eye on price fluctuations and major news in the sector could guide your decision. However, it's essential to be aware of potential risks, such as supply chain disruptions and heavy reliance on government contracts, which could impact performance. Let's dive into Bending Spoons SPA, a dynamic tech company hailing from Italy. Known for their cutting-edge mobile app development, Bending Spoons focuses on creating user-friendly and innovative applications that cater to a wide audience. They operate in the bustling technology sector, specifically within the mobile applications market, which is becoming increasingly competitive as more consumers shift towards mobile solutions. With a strong commitment to quality and user experience, Bending Spoons is gearing up to make a significant impact in the app landscape. Their ability to stay ahead of trends while delivering reliable products is crucial in this fast-paced industry, making them a company to watch in the coming years. Now let's talk about the IPO details. Bending Spoons officially listed on the Nasdaq exchange on July 1, 2026. They successfully raised around $1.68 billion, which is a significant amount for a tech company entering the public market. The final price was set at $29 per share, and since then, we've seen the stock making waves in the market. As of now, it's trading at an impressive $35.93, which indicates a strong initial performance and investor confidence in their potential. It's always exciting to see how a newly listed company performs, especially in the tech sector, where innovation plays a key role in growth. Looking ahead, the outlook for Bending Spoons appears quite promising. In the short term, their strong initial trading performance suggests that investors are optimistic about their growth prospects. However, the long-term potential will largely depend on their ability to innovate and meet the market demand for mobile applications. As they continue to develop new and exciting apps, they may solidify their position in a competitive landscape. For those considering an educational entry and exit plan, you might think about entering if the stock retraces to around the IPO price range of $29 to $30, while keeping an eye on performance metrics and market news. A potential exit could be considered if the stock reaches significantly higher levels, such as $40, depending on market conditions. Remember, the key risk here includes fierce competition in the tech sector and potential market volatility, so it's important to stay informed and make decisions accordingly. Today, let's dive into ITG Inc., a company that's making waves in the tech sector. Founded with a vision to revolutionize financial services, ITG Inc. focuses on providing innovative software solutions that enhance efficiency and empower users. In a rapidly evolving landscape where fintech is king, ITG is positioning itself to compete against some heavy hitters. Their commitment to cutting-edge technology and user-centric design allows them to stand out in a crowded market. As we explore their recent IPO, it's essential to understand not just what they do, but also how they fit into the broader tech landscape. This makes ITG a fascinating company to watch. Now, let's talk about the juicy details of ITG Inc. IPO. They officially hit the market on July 1, 2026, listing on the XNAS exchange. Initially, they set their price band between $19.0 and $22.0, which created quite a buzz. However, the final price came in lower at $16.0 per share. Fast forward to today, and ITG is currently trading at approximately $15.46, just a tad below their IPO price. This lower-than-expected trading price might raise eyebrows, but it's not uncommon for new listings to experience volatility as the market finds its footing. Keep an eye on how this plays out in the coming weeks. Looking ahead, the outlook for ITG Inc. presents both challenges and opportunities. In the short term, we might see some rocky waters as the stock adjusts following its IPO. However, long-term potential appears promising, particularly if ITG can successfully scale its operations and continue to innovate within the fintech space. For those contemplating a trade plan, an educational approach could be to consider entering around the $15 mark, especially if you believe in their long-term growth. An exit strategy could be targeted around $20, aligning with the higher end of their original price band. Of course, always keep in mind the key risks, such as market volatility and competition in the tech sector, which could affect your investment. Hey everyone! Today, let's dive into Neutron Holdings Inc., trading under the ticker LIME. This company is making waves in the micromobility sector, which is all about providing convenient and eco-friendly transportation solutions. Neutron is particularly known for its e-scooter and bike-sharing services, making it easier for city dwellers to navigate urban landscapes without the hassle of traditional vehicles. As cities continue to focus on sustainability and reducing carbon footprints, Neutron is positioning itself as a go-to option for those looking for greener alternatives. They target eco-conscious consumers who are keen on embracing innovative ways of getting around. Given the rising trend of urbanization and sustainability, Neutron's offerings are becoming increasingly relevant in today's fast-paced world. Now, let's break down the IPO details. Neutron Holdings Inc., officially listed on the XNAS exchange on July 1, 2026. The company successfully raised around $173.9 million through this IPO, which is a significant boost for its growth plans. The shares were offered in a price band of $24 to $26, and they ultimately settled at a final price of $25. As of now, the last price is also at $25, indicating that the shares are trading at their initial offer price. This stability can be a good sign for new investors, as it suggests that the market is absorbing the shares well. However, as always, it's essential to keep an eye on market trends and sentiment as trading continues. Looking ahead, what's the outlook for Neutron Holdings? In the short term, the outlook appears stable, especially as urban mobility trends continue to rise. With an increasing number of cities embracing micromobility solutions, Neutron could see a boost in demand for its services. In the long run, there's potential for substantial growth, provided they can effectively capture market share and innovate their offerings. For those considering entry into this stock, an educational strategy could be to watch for price fluctuations around the $25 mark. A potential entry point could be if it dips below this price, while an exit strategy might be to consider selling if it climbs significantly above $30, depending on broader market conditions. However, remember, key risks include regulatory challenges and fierce competition in the micromobility space, so always do your research. If this breakdown helped you out, do me a quick favor, smash that like button and hit subscribe so you never miss an IPO analysis. And before you go, please let me know your thoughts down in the comments. Where do you see this one heading? What's the high and the low you're expecting? Are you bullish or bearish? And would you actually buy it? And drop the name or ticker of any other stock or IPO you want me to review next, and I'll cover it in an upcoming video. This is for education purposes only, not financial advice. Trade safe. And if this video helped you in any way, please hit the like button and subscribe to the channel. It really motivates us to keep making these for you. And join my free Telegram channel for daily alerts with exact entry and exit prices. The link is in the description.